You're watching Smart 24 TV, and we bring you nothing but business in detail. And now something I just remembered, our tomatoes still have a pending ban to the European markets, and so we're looking forward to improving them. But that is it for the markets. The report from Saddam Mubale. I hope you understood what's happening in the markets and what to expect as we head into the festive season. But speaking again about the festive season, there is something that you must have heard once or twice, and that's insurance. Insurance, something you really need, whether you like it or not. You must really get to understand, and the earlier the better. In studio with me, I have someone from the Insurance Regulatory Authority, and that is Kevin Kateete, and we shall be talking about insurance. That is in line with the event that's happening today, the CEO's breakfast meeting, where the CEO is actually going to be talking about the achievements, the failures, the shortcomings, and everything concerning insurance in 2019. You're welcome on set, Kevin.
Thank you.
A very good morning to you.
Good morning.
Did you travel safely here?
Yes, I did.
Okay, that's awesome. So we start with the uptake. How has 2019 been with insurance uptake?
We're seeing an improvement from last year based on a comparison with Q3 performance of last year and this year. And we can see that by Q3 this year, the market has already reached 86% of the full year performance of last year. So based on that, we can tell when Q4 comes in, there's going to be a growth from last year.
And so that would require us to understand which insurance has been taken up the most for the various types that are on board.
Okay, the leading insurance uptake still remains in the general insurance sector. That's liability cover, the property covers, and then we always have a focus on health, because health is something that there's a great demand for of insurance. And then we have very fast growing interest in life insurance, which has grown by an average of 30% over the past 5 years, and as we speak, Q3 performance, it's already at over 90% of last year's full performance. So we're also seeing a growth there.
Okay, it's always good to open the morning with the brighter side of things. Yeah. So let's look at the achievements. What are the achievements of insurance in Uganda for this year?
Yes, okay. This year there are many things to report about that I would say that we've done well. There's progress on marine insurance. It's something that we've been working with URA and with the Uganda Insurance Association. There's going to be an online platform for that as well. There's been progress on a motor third party online platform. So that means going forward, the public can be able to access motor third party online through a mobile platform. So there's also the insurance regulations for this year. They have reached stages where they're with the first parliamentary council. So that would say is the final stage. We'll have a fully fledged what we call risk-based supervision framework once they are approved by the minister. So I'd say there's a lot of progress. We have rolled out the risk-based supervision framework. We've had trainings. We've met with boards of all the insurance companies, trained them on it. We have also had what we call quantitative impact studies, just to do test runs to see how the risk-based capital framework is working. And we have shared the results with the different players as well. We've had discussions on takaful insurance. Takaful is Islamic insurance, and we already have completed the first review of the draft regulations for takaful. So we're also quite positive on that.
What is it about? Would you expound on that?
For takaful, we're looking at insurance that follows Sharia law.
All right.
And when you look at Sharia law has certain restrictions on how you can treat monies. For example, we're looking at interest, riba, things that are considered haram in Islam.
Okay.
And also the fact that even the people managing the insurance business or even the regulator have to understand the business from a Sharia perspective so that they can navigate the gray areas that exist in how they manage the funds. Yeah.
So is that connected to Islamic banking?
Yes, it is.
Okay, that's very good to know. And so gauging from the performance, from the achievements, how many more people have you got on board?
There's been an increase in insurance agents. We have more bank assurance agents. We have licensed 20 so far. In terms of insurance companies, we had an exit and an entry, same company, AIG, so they're back in the market. We have had entries from last year that are steadily growing. That's we have Mayfair Insurance, we have our new micro insurance company, the sole one called GMI, that is also steadily trying to pick up. And on the loss assessor side and broker segment, we have also had several entries. So when you look at the total numbers, we have about above 20 licensed loss assessors. Okay, the number is more around 28. We have also above 40 brokers. We had a new reinsurance broker that came in last year, so we have a total of 2 reinsurance brokers. We're expecting a new reinsurer to be in the market, still within the final licensing stages. So we're looking at a very positive uptake and interest in doing the business.
Okay, and on a scale of 100%, what has the percentage been in the increase for this year?
As of now, it would not be the best point in time to gauge the increase. All we can do is have a comparison, with the final figures of last year and where we are right now. And where we are right now, you will find that on average in the different classes, it's above 80% as of third quarter. Just to particularly focus on life, for life it's above 90%. So given that this is a sector that has been growing over 30%, it's something that is really positive. So we can see that there's interest there, there's interest in health, and in terms of steady growth, we have several companies writing pretty well. We have Jubilee that wrote above 100 last year, already has about 120 billion in gross written premiums. So it's something that I'd say, in performance-wise, I am very optimistic that by the time we have the final figures for the full year, there will be growth.
Well, that is for only 1 year, because one of your officials actually did say that insurance intake in Uganda is just 1%, is just barely above 1%.
Okay, when you look at insurance uptake, what we use to gauge it is we look at the penetration rate vis-a-vis GDP. Okay. So when you look at on average how we've been performing, it has been between 0.86% and 0.84%. So that is something that we would want to have it above 3%, like our neighbors in Kenya. Okay. Yeah, but at the same time, we have to be cognizant of the fact that insurance moves with the economy. So when the economy is doing well, when businesses are thriving, people are looking to protect their investments, their assets, then you will see that's spurring on into insurance.
So the dream or the projection that would have 7% by 10 years to come, is that achievable?
Yes, it is. What we're doing as a regulator is we're looking at what we can impact on. And that's majorly even drafted in our regulations and in our act, what we have powers over, and that is making sure that we set up a framework that will provide assurance to the public. Because the major challenge we have is in understanding and even trust. So we're working on trust. We're working on understanding through awareness campaigns. And with that, we feel it should spur on into insurance uptake.
And speaking of trust, and you know, what caused the exits that you mentioned earlier?
Yes, okay. There have been several exits and entries. Some that were strategic, while others historically were based on Ugandan history and what has happened and what we've been through. So you could look at it from an aspect of we've had a currency devaluation. We've had an economy that has not been doing so well, and that definitely has an impact on how people view insurance if insurance is not able to either assist them in safeguarding their assets or even meeting their expectations. And before we were set up as we were first a commission in 1996, and then we had an act of parliament that set us up as a regulator. That's in 2011. So before our existence, there was that gray area. Who do we run to? If an insurance company fails, who can we go to assure us that these insurance companies are fully backed to meet the obligations? Or if there's misconduct, what happens?
So does that mean that people had to run away to themselves instead than going to the insurance companies?
Yes. When you look at the Ugandan market, most of it is informal, and also translates into the mechanisms that we have for dealing with the risks that we have. We have a lot of informal mechanisms, but they really fall short of insurance, because insurance is a scientific way of looking at things, and it is backed by a lot of research, backed by a lot of I'd say past history, and we have a lot of history of things to learn from. So when you look at the products, the policies, and the mechanisms for pricing, these are things that have been tested. While when you look at informal, it's hit and run and trial and error. So I'd say it's a fully enhanced way of looking at risk management.
And so today's event, who are the people being addressed? Because this seems like the kind where you just sit down and give a report, and then we have the informal sector like you've mentioned, and these are people that would need this information more, but they're not always in position to actually be at these kinds of gatherings.
Yes, this kind of gathering is really specific for the CEOs in the industry. Basically giving them a so-called market third quarter report. This is how you've performed. The kind of information that would be in this particular setup would be different from the kind of information that the informal sector needs. We wouldn't want to go and have a formal gathering giving statistics when that's not the kind of information that the informal sector needs. We have a different way we look at that. We tend to target different segments of the informal sector, whether it's looking at farmers and agriculture, or it's looking at teachers who are formal. We tend to have different gatherings where we meet with them and give them the information.
And so how far has been that, the gatherings, speaking with these people, meeting them and teaching them about insurance, how has that been?
Yes, we've gotten very good feedback. especially on the challenges they've been facing with the sector, the expectations they have, because the customer is king. They basically drive. And based on that, we've been able to better enhance our look to regulation, especially around market conduct, which is basically affects how insurance is viewed.
And so would you say that you've given enough, especially information, to the informal sector? I am very sure they are not CEOs, they're not supposed to sit at this event, but they still need to understand how they can approach insurance, because it's very true that even if you walk out of here and speak to any person, they will actually not understand insurance beyond maybe 2%. Yes, so what are you doing to get people to understand?
Yes, when we look at understanding, you can never have enough public education. It's something that we know. It's our mandate, and we'll constantly exhaust the resources that we have towards that. And as a result, we have within our strategy as a regulator to meet different sectors of the public and have discussions with them, present to them what the insurance sector has for them, and have that platform where they share with us their issues as well. In terms of how that plays into their understanding, we're also looking at supporting through a framework that will provide trust, because even with understanding, we have seen that people know about insurance, but if they don't trust it, then it's meaningless.
Okay, so it's trust and education together.
Yeah, it has to go together.
Okay, that should be very helpful. And now agriculture insurance, what is that one about, and what does it entail? How can you break it down?
Yes, when you look at agricultural insurance, with the change in the risk of climate change, farmers are susceptible to drought, flood, and what agricultural insurance aims to do is to step in and provide what I would call indemnity, for lack of a better word, or compensation in the event that these risks occur. And when you look at agriculture, if there is a flood, it's not going to affect one person. It's something that affects a particular region. Okay. Yeah, so the agricultural insurance that we have is weather index based. We have a consortium, and we even have a government subsidy for it. Yeah, and during the year, over 5 billion has been spent towards this subsidy. Yeah.
And so that goes for every area that's prone to, flooding or any other effect of climate change?
Yes, it has to be viewed from an agricultural perspective. So we're looking at farmers. It's targeting farmers, and farmers from a large scale and small scale perspective. Yeah. So the challenge they have as farmers is the cost. Okay. So the government sought to subsidize this cost by setting aside funds that will make it cheaper.
Okay, we should be adding on shortly, but right there on your screen, that is Crystal Amanda, our presenter at Serena Hotel, and she should be talking to us shortly about what the event is like right there.
It is a good morning at the Kampala Hotel, where the insurance CEO's first meeting is being held as they discuss and also release the report of the performance of the sector 2019.
If I don't get a fire, burning down my shop, what happens? Do I get my money back? There is that question that has always been popping up all the time. So the question is there anything more that you are adding to insurance actually to make it better? Because I'm looking at flooding in eastern Uganda, where there are no gardens in particular, but then people are stranded. Is there insurance that can cater for that kind of event?
Yes, insurance has specific risks that it caters for.
Okay.
Yeah, though in the ideal situation, everything should be insurable in the ideal situation. But when we look at insurance from a Ugandan perspective, there are risks that the insurance companies have looked at and said this is what we are willing to provide to the market, because this is what suits the market right now. And from an aspect of 2019, there have been several developments in the area of clinical trials, for example, where you look at Uganda as I'd say an ideal market for pharmaceutical companies and healthcare companies to test their drugs. And because of that comes with a liability risk, and we've had guidelines and an MOU with the MDA on clinical trials. When you look at something like workmen's compensation, for example, we have so many people who work under employers whose working environments may make them susceptible to injury. What is the insurance regulator doing? We're trying to ensure that these employers, because there is an act that backs it, ensure their employees to make sure that in case anything happens while they're at work, they are covered. So we're working with the KCCA, we're working with Ministry of Gender, and we have done several inspections of these companies just to ensure that there's workmen's compensation cover for them. Then we've worked with, we have a partnership with financial sector deepening. They have an interest in financial inclusion. And when you look at the Uganda as a country, we are majorly micro-based. So they have several initiatives towards boosting innovation in that space. They have a program that is running where they are sponsoring innovation. And we're also running a project with them where they are helping assist with our product approval process.
Okay, so that means that you mentioned the Ugandan context. It means that, what does that actually mean before I add my own words, the Ugandan context of insurance?
Yes, because insurance can get quite complex. Because when you look at the risks globally, we are not the sort of country to expect hurricanes. And in actual fact, in more advanced markets, the insurance sector is able to cover such risks, earthquakes and hurricanes. And while when you look in Uganda, we may have those as exclusions. So it's not to say that insurance companies cannot cover such risks. It's when you look at our context, what are the risks that would make sense from making it an equitable, premium friendly solution for the general population.
And so we're moving very fast forward. Looking at the entire year, there must have been challenges. What are some challenges that you would point out that have really been tough for this year?
Yes, of course, we have the ever challenging consumer awareness deficit. We've spoken a lot about that. We also have what we call market conduct issues, undercutting, underpricing. We've had several incidences of fraud.
That is very interesting. Can we speak about that one? Because that is the biggest concern of so many people that are involved in insurance.
Yes. When we look at fraud, fraud arises both internally in the insurance company and also externally from customers who are seeking to gain from insurance from a I'd say ethical manner. So this year we were lucky enough to have set up a fraud unit, and the fraud unit has uncovered so many incidences where we have people faking third-party stickers. And definitely this affects the insurance sector, because if you have a fake sticker as a customer and you go to an insurance company expecting them to pay and they tell you that is not our sticker, you think the insurance company is
fake.
And that basically paints the insurance industry in a bad light. Yet in actual fact there are other parties at play who are seeking to gain from unsuspecting customers.
Well, that is very bad and very sad. Do you have any solutions that you have at hand for that?
Yes, we have several initiatives. Of course, we are following up on the different whistleblowing cases, and that's through our fraud investigation unit. And then we have the partnership with the UIA and with URA to ensure that once we have we have a motor third party online platform that allows payment for motor third party through the mobile app, and because of that we are seeking to ensure that it becomes a bit more restricted as to how you will either forge or cheat insurance companies. Yeah.
Okay, so we're heading into projections for the next year. Of course, you have to have things that you're looking forward to improving, but then again, online seems to be really reliable. Do you think that insurance can be taken online altogether?
Yes, it can. Of course, it's something that you don't just have a wholesale change. So we're looking at a piloting phase, of course, and eventually technology is taking over. It's something that we cannot hide from, and we are definitely encouraging the different players to innovate and look for more online solutions, and we're also looking at, in terms of the regulator, how do we also develop systems that are less manual in nature. We have, we're in the final stages of having a regulatory system. It's actually with our sister regulator NITA, and it's through that we're expecting to at least have a more technology-backed industry.
So you are the regulator. Before we can head to projections, what would you say about the companies? How are they behaving?
In terms of conduct, of course, there have been some issues we have had. I think I mentioned some issues of undercutting, underpricing. However, on a general trend, insurance companies have been behaving well. In terms of claims, they've been paying claims. We've not had many issues of failure to pay, and I'd say they are, in terms of taking up the challenge to go risk-based, they have shown, most of them are positive towards it, and it's something that we're positive about their performances.
Okay, that is very nice coming from the top person, the regulator. So speaking about projections, what do you have for the year ahead, depending on what you've seen throughout this year?
Yes, we are looking towards a better performance than last year. We're looking at bank assurance performing better than they had in the year 2018. We're looking at having marine going fully fledged. We're having a look at fully fledged regulations. We are beginning what we call perpetual licensing. So now insurance companies would not need to constantly apply for an annual license. Now it's one issuance of licenses. Okay. We're looking forward to preparing for the IFRS requirements. There are several activities that we have in terms of awareness.
Okay, that's very good. Looking at the festive season, usually that's when Uganda becomes the most active. And by active, I actually mean, the smiles are bigger, but the problems too increase. The crimes, the stealing, the fires. So what would you say to the viewer concerning insurance and the festive season?
Yes, I think in the festive season, insurance is a must. It's a must for your property, it's a must for your vehicles, because we can tell that at this point in time we expect accidents to rise, we expect burglaries to rise, and as anyone who is, I'd say, aware of the fact that they're exposed to this risk, insurance would help ease on the financial burden. Once January arises, and you know, January and February school fees, you would not want to go back at that point in time and start repurchasing assets that can easily be covered by insurance.
And you mentioned something about life insurance being the highest in uptake. What is the cause for that? What's the reason? Why are the others behind?
Okay, life insurance is not really the highest in uptake.
Okay.
But in terms of growth, it's the sector that is the fastest growing.
Oh, in growth.
Yes, and when you look at the reasons behind that, life insurance companies have had a strategy of using agents. The thing with agents is they tend to be more personal. They tend to come and explain to you. So it's easier for you to take it up after someone has explained, as opposed to other forms of insurance that have direct businesses online, like when you look at property cover, or even covers for SME property, fire. They tend to approach the insurance company once they've identified the need.
Okay.
Yeah, so life insurance is hawked more or less, while when you look at the general, it's you decide